Going concern. Are you a going concern? Am I? There's just a lot of accounting jokes to be made with this. Sure, if you work in the industry, you've heard quite a bit of them, right? So going concern means that an entity is financially stable. So it's a good thing. You want to be a going concern. That's actually a point of confusion for some people. They think a going concern is a bad thing because it says concern. No, you want to be a going concern because it means that you're financially stable enough to continue operations for the foreseeable future. Now, what is that period? The foreseeable future is generally agreed to be for 1 year after the financial statement date. So if you're doing the financial statements, if you are auditing the financial statements, if you see that, okay, there's a chance we might go out of business in 3 years, you're still a going concern. You still are in a good position. Now, maybe if you see for some reason you're going to go out of business in 3 years, you would disclose that, but there is not a going concern. And this is not a bad thing. Here is the important point to keep in mind. Okay, it's a bad thing. But what I mean by that is it's not a cause for a bad opinion. I'll say this in FAR, and I've probably mentioned this many times throughout this exam. If the company is an absolute dumpster fire, if expenses are crazy high, revenues are crazy low, if there's just a lot of, now there's no fraud, right? It's just the company's not doing well. There's a lot of competitors just weeding you out of the industry. So yes, you're a going concern. Yes, it's likely you may not make it to the end of the year. But if this is properly disclosed, if management properly takes responsibility to disclose that, yes, there's a going concern issue, here are the reasons why. If it's all properly reported, there's no reason that this company cannot get a clean opinion. Just to summarize that, say it again, the company could be financially awful. It could be a dumpster fire, losing money, probably not going to be in business for another 6 months. But if that's all properly stated and disclosed, there's no reason this company can't get a clean opinion for that particular reason. So just because profitability is a concern doesn't mean we have a concern for the opinion. It's a good thing to be a going concern if the entity is no longer a going concern, meaning there is concern for the future stability of it, financial stability. The client/management has a responsibility and a requirement to disclose the going concern issues. Why are you potentially going to go out of business? What's going on? Is there reasons? Can you not pay your bills, right? I mean, bankruptcy is essentially, to grossly oversimplify it, you can't pay your bills anymore. An auditor's responsibility, if there is substantial doubt, for a reasonable time for that 1 year period, is to assess management's plans to alleviate the substantial doubt and whether or not the concern is adequately disclosed. So in addition to, is it adequately disclosed, what is management's plans to alleviate the doubt? Now, if management, let's build on what we said before. If management properly discloses that there's a problem, that they're possibly going under, but then management says, but here's our plan to fix that. It's not whether or not the plan is definitely going to work. It's not the auditor's job to make sure that management has the perfect plan to change the company around. It's the auditor's responsibility to make sure that this is a reasonable plan, that management's reasonably going to be able to follow through with it, that they're not crazy overpromising, they're not promising a change in interest rate environment for the whole country, right? Because they can't control that. So if management's saying, yeah, well, interest rates are going to go down, we'll be able to borrow money, they have no control over that. So you wouldn't be able to include that. And as such, the auditor would say, yeah, no. This list of items that you're going to use to alleviate the substantial doubt, you need to correct that to make it reasonable. Per FASB, a reasonable time is that 1 year. We're reeling that home, right? I love to include things multiple times because I don't want you to forget. And repetition is how we memorize. The following are reasons that an entity could have issues continuing as a going concern. Negative trends in financial operating results, right? You're just losing money, defaulting on loans, unable to pay your debt, uninsured massive disaster, your factories all get destroyed, and you don't have insurance. If you can't borrow money because your credit is denied by suppliers or financial institutions, continuous losses, operations are being halted for some reason, significant macroeconomic trends, no one's buying your products in your industry at all anymore, negative operating cash flow. It's just, all these things just should bring a feeling of dread, right? You never want this to happen in your own company. And inability to pay dividends that were already declared. These are signs and issues, and all of the, one of these may not be completely a cause for a going concern, but maybe it's multiple of these, or maybe one of these items is just so bad that itself is cause. It just depends, and it's not our job here on the exam to determine that. It's our job to understand how you would act in this situation. Continuing on, going concern, the client needs to demonstrate mitigating actions, right? Now, it's not our job as the CPA to determine, oh, is this the best course of action? But the client needs to demonstrate that they're doing something. And again, these are things that would be reasonable, right? Reasonable. Now, these are items that have been pulled from multiple choice questions I've seen. I mean, this is not an exhaustive list. There can be more, but these are the commonly asked questions of the exam. Debt restructuring to lower rates and renegotiation of due dates or amounts. If you say, hey, bank, I'm borrowing money from, I can't pay you back at the current rate. I know it's not good, but if you lower my interest rate and maybe make it so I don't have to pay it back as soon, I'll be able to pay you back in full as compared to you trying to claw your money back from me in bankruptcy court. Changes in equity ownership. I'm not going to dive into that, just memorize that. I mean, yeah, I will dive into it. I just like giving a little extra context. Maybe you've got someone who buys up some stock who could really turn the company around. I'll just pause it there. I mean, I could keep going, but for the sake of what you need to know, I won't. Reducing expenses, shocker, right? Reducing your expenses. I'd say also increasing revenues would be a great way to stay in business. Reductions in dividend payments, just reductions in outflows, and increases in inflows, right? Just in general, however that may seem, just what do you need to do to keep your company going? These are just some of the examples. Example of an auditor statement on a going concern issue. Here is what you would see. In our opinion, the company has not provided sufficient evidence to support the going assumption. The company has a history of losses and negative cash flows from operations. In addition, the company has a material amount of debt due within 1 year. These factors raise substantial doubt about the company's ability to continue as a going concern. However, remember what I said before? Issues with going concern do not automatically mean a negative opinion. This sounds pretty dang bad, doesn't it? Right? This sounds really bad. However, this doesn't mean the company's getting a bad opinion. If this is all adequately disclosed and the financial statements display a picture of what's going on, a snapshot of the period, right, of a point in time, income statement, balance sheet of what's actually happening, that's what we're here for. It's up to the investors to realize, hey, this company's not doing well. Let me not invest in it. It's not your job to make sure the investors make good investment decisions. It's your job to make sure that they have the proper financial statements to then use their own knowledge and expertise. Hopefully, if you're investing, you use some expertise to then decide what they need to do. Now, remember that opinions are based on how fairly the financial statements are presented. Just going to go crazy underlying here. Super important point. It was not drilled into me enough when I was studying, so I want to make sure that is the case for you. If the company is an absolute dumpster fire, I didn't coin the term, but I like it, and is losing billions of dollars each year with no alleviation in sight, as long as that information is adequately disclosed, now no alleviation in sight, take that with a grain of salt because management does need to include these hopefully mitigating resolutions with that. But as long as it's adequately disclosed, the company can receive a clean opinion with a separate section with the heading, substantial doubt about the entity's ability to continue as a going concern, which describes the situation. So something like this. If management alleviates the going concern issue, so let's say there is an issue, but then management pulls a miracle, right? And they turn it around. Management has the option of adding an emphasis of matter paragraph in the auditor's report. That is something that we could do, something to make note of, and hopefully we turn the company around and make it for the better. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.